right, welcome back. So, as always, I am not a financial advisor. Everything you see here is from my own portfolio. You just get my thoughts and views on potential trades and do your own due diligence. Do not copy me, but this will show you some ideas and think for yourself. Maybe these are good for you to do or not. Now, let's go on to my portfolio spreadsheet. All right, so we had a pretty volatile week. I got out of a few trades on Robinhood, made some new trades on Robinhood. So earnings is really increasing the volatility here. So what happened was this past week, I had a cover call that I bought back, thinking it would rise up in value and then I can get back in. So this week it's been a lot of up and downs. So the stock dropped a bit, so I bought it back, and right now I'm $130 in profit on that. I'm waiting for it to go back up, and then I'll go back in, make another cover call. The cost basis is 113, so right now it's at 108. So I have to wait for it to go back to around 113 to get back in. But it's been doing that all week. It even hit around 120. So with the put side of things, because it was running up so high, I got out of a few puts, bought them back, and then when it dropped, I got back in and sold some more puts. So I'm playing both sides, up and down. So as you can see here, for example, the believe it was the January 9th. I made this sold put here, 112 strike, expiration date January 16th. So I bought it back, made $142 profit the same day, pretty sure the same day. So this was January 14th it happened. I sold that January 9th that I did, and then I bought it back. Sorry, I confused myself a lot. So the January 9th I made that, sold that put, but on January 14th I bought it back, and then also January 14th I sold a 113 put for 230, bought that one back, also made $77 on it in a day. So this is what I mean, the volatility is going up and down. Can't do too many of these. I don't want to get flagged as a pattern day trader, but if you do it once in a while, there's no harm in that. So as long as you are aware of the pattern day trader rules, doing it once or twice in a week and then not doing it for a little while, you're fine. So that's pretty much what I did here. And then I sold on the 15th the 114th and the 112 strike for $224 and $175. And when it was around $108, I bought a long call expiring April 17th. That was the 95 strike. So hopefully this week or the next week, it will run up, hopefully back up to like around 120, and I'll get out of that in profit too. Because of the chart here, I don't buy calls all the time. I don't have a slot here to say how much I paid, but I paid around $2,000 for it. So I paid $2,000 for a long call that expires in April, and hopefully this will go up in value next week or the week after, and then I'll sell it for a profit. So when I do that, then I'll put it in here as the premium. So total so far pretty dead even. So the total so far is around 1500, but then totaling out that I bought some back and sold some new ones, still 1500. But right now I'm waiting for the stock to go up to sell the cover call, and I'm waiting for the stock to go up to sell my bought call. So hopefully that will raise my total in a week or so. And then SoFi, nothing much has happened with SoFi. It's been around 26. So let's do SoFi here. You can see in the whole week here, oh, there was a little bit of volatility, but I guess I didn't catch it during the week on my phone. But as you can see, it's been around 26, and then it dropped. Oh, well, yeah, it's still within the 26 range. So even this drop here, barely touched 27 on the 14th, dropped to the lowest was 25.99. So still within that 26 range, and went back up to around 27.28, dropped to the 26. So it's been hovering around 27, 26 the entire week. We'll see what happens next week. So I still have a few plays. I still got the cover call for 30. If by next week it's still hovering around 26, maybe drops to 25, I might buy my call back and then see if it runs up and then get back in, because you still have some time, and I don't want to get rid of my shares per se, unless it does really hit 30, but we'll see what happens there. But Hood was the real trade this week. It was up and down, up and down. So let's see here. What the beginning of the week, the lowest was around 108 on the 12th, then went up to 118, 119, 119.86, then 121, dropped back down to 110, then hovered around the 112, and now it's around 106, went back up. So right now Hood is at 108.71. So like I said earlier, hopefully this will go back up. I needed to go to at least 113 to get back in on the cover call, and I will wait a little longer. If it hits around 120, I will sell my bought call and make a profit on that. So that's this week, and we'll see what happens. That's my thought process here. It's all about Robinhood and SoFi for now. No top 5. This is just the earnings for Robinhood and SoFi. So much hype, a lot of retail investing. So plus they're good companies. So I feel like I can't go wrong with this for now. So there's nothing wrong with playing volatility here. Let me know if you agree with what I'm doing. Maybe I am playing too much, kind of gambling, but I feel like if there's the volatility, take advantage of it. Looking forward to any comments for this week. Thank you very much, and I'll see you all on the next one.